Hello, today's October 9th, 2014. I'm Tennant. Let's talk about the market. As always, I start off by going over my last calls. I looked for a big drop today and that worked. I had a mejt target of 1936.71. That printed and was a good support resistance area. I also said, based on the diamond on stilts pattern, that there was a good chance that yesterday's late high would hold, and it did. This is the mejt chart. As always, thin lines are support resistance levels, thick lines are targets. White dots indicate targets which have been satisfied, and F means a false move. In the morning, the system said ultimately higher prices would print and said they would print over this line. It hasn't happened yet, and so we have a target of 1961.99. It's based on an ultimate signal. There's no particular time frame, but almost always it prints pretty soon. During the morning sequence, there was also a lower target as indicated by the thick line, and that printed. The white dot here shows that we got the 1936.71 price from yesterday. In the afternoon, the system said ultimately higher prices would print, which they did. The system said it was a false move, targeted a return to this thick line, which happened. Here's the print. There is support under mejt targets, so we're at a support level and have a higher target. Well, the market really collapsed today, so how likely is it that this 1961.99 target will print? Well, it comes from an ultimate signal in the morning. This is a computer analysis of all morning ultimate signals, buys and sells from January 1st, 2009 through the close of trading July 28th, 2014, 5.5 years. There were 105 ultimate buys. They've all printed. Perhaps more significantly, there were 121 ultimate sell signals in a market that was going straight up, and 120 of them printed. That's one failure out of 126 signals. So I'd like to find some way for the market to hit that price at some time, more likely sooner rather than later. But just because I like something, that doesn't mean it has to happen. Let's look at some other things. The market gapped lower from the open, dropped all day and closed near the low. That's usually negative, particularly when we close under the low of the first drop. However, with only 5 minutes left to trade, don't do that to me. We could not close under that low. What happens in the last 5 minutes doesn't mean much because the big money's all gone home. All this means is that the public wanted to sell at a time when institutions were no longer around to buy. Public's usually wrong, not always. This is a daily chart. If we ignore the actual low and connect the lows before it and after it, we see we're at a strong support. Usually this support holds the first time it's hit and then breaks very seriously when it's hit again. If it breaks the first time it's hit, it's typically with a gap under that trend line. Futures showed a very interesting pattern yesterday. I said here prices were up a little bit, here that a big drop was coming, and even though we went substantially higher during the day, by the time the market opened it gapped down. Here we weren't able to take out the low of the prior day until after the institutions had ceased trading. So everyone in the public was willing to sell below that level. But here's the close of trading. During the close of trading, it couldn't be undercut. We're now going over the level again, so it's possible we're going to have a mirror image of what happened yesterday. Let's go over some more things. Tuesday, we had a down day. Yesterday, we had an outside reversal bar. Today, we traded completely within the range of Wednesday's trading, and the volume dropped. Unless proven otherwise, by proven otherwise I mean we go under this low. This has the volume, this is the outside reversal, and that has to be given the benefit of the doubt. When you have a straight up move like this with a gap, what usually happens is within a day or a day and a half, the gap closes and we trade over this high. Let's look at the diamond on stilts pattern. Here we have a stilt, half a diamond's enough. As usual, the first challenge or so of the origin of the left stilt holds, and the next one fails in a large way. Then we had an inverted diamond on stilts. Here's the origin of the left stilt, and that first test held. I showed yesterday how there was a Fibonacci relationship here at the high. Now we have another diamond on stilts, half a diamond's enough, and here's the origin of the left stilt. It didn't hold, however, if you start with the extreme of the left stilt, go to the extreme of the right stilt, set it at 61.8%, 100% levels right at the low. So we're at a level which is a target of the diamond on stilts pattern. We don't have to hold here, but it's a logical level for us to hold. I'm reluctant to offer any positive predictions here because the market's inevitably going to break lower. Even yesterday when the market was up a huge amount, the percentage of positive stocks dropped precipitously, which is one of the ways I knew it was a false move. And I'm reluctant to call for a strong rally here. However, one of two possibilities, and I think the most likely possibility, is that we gap up perhaps sharply, close this gap here, and overtake this high. Hard as it is to believe, wild swings are typical of markets at their peaks. If the call fails, and it's entirely possible it will fail, I expect a big gap down. I think it's going to be a lot more obvious at tomorrow's open. And so the call for tomorrow is a gap opening, a large move, with, believe it or not, a decent chance we overtake yesterday's high if the gap is higher. And that's today's call.